Voiceover. Welcome back to our channel. Today, we have got something very essential for every salaried person out there. We are going to crack the code behind the calculation of house rent allowance or HRA. Yes, you heard it right. We are simplifying the complex and making it easy for you. Stay tuned as we dive into the world of HRA calculation, its components, and how it impacts your income. So grab your notepad and let's jump right in. Ever wondered how your house rent allowance or HRA is calculated? It's a common question, and today we're going to unravel the mystery behind it. First, it's important to understand what HRA is. House rent allowance is a component of a salary that is provided by an employer to an employee to meet the cost of renting a home. It provides employees with tax benefits for what they are paying towards accommodations every year. The calculation and final amount of HRA can differ and depends on certain factors. So how is HRA calculated? It's based on three components. The first is the actual rent that is paid for the house. The second is which includes basic pay, dearness allowance, and any other taxable allowances. The third component is based on where you live. For example, if you live in a metro city like Delhi or a non-metro city like Nagpur, the calculation of HRA is the minimum of the following three amounts. 1. 50% of the salary if the employee is living in a metro city, or 40% if living in a non-metro city. 1. Actual rent paid less 10% of the salary. 1. The actual amount of HRA received from the employer. Output. Now let's break that down with an example. Imagine a person residing in a non-metro city like Nagpur with a basic salary of 30,000 rupees a month. The HRA received from the employer is 14,000 rupees and the actual rent paid is 12,000. For the first component, 40% of the salary, since it's a non-metro city, would be 12,000 rupees. The second component, the actual rent paid less 10% of the salary, amounts to 9,000 rupees. The third component, the actual HRA received from the employer, is 14,000 rupees. So the HRA will be calculated as the minimum of these three amounts. In this case, it would be 9,000 rupees. Now let's take another example. This time we'll consider a person living in a metro city like Delhi. We will visualize all the components such as HRA, basic salary, and actual rent claim in a flowchart or chart form to make it more intuitive. Here, the individual has a basic salary of 40,000 rupees a month. The HRA received from the employer is 20,000 rupees and the actual rent paid is 18,000 rupees. For the first component, 50% of the salary, since it's a metro city, would be 20,000 rupees. The second component, the actual rent paid less 10% of the salary, amounts to 14,000 rupees. The third component, the actual HRA received from the employer, is 20,000 rupees. The HRA will be calculated as the minimum of these three amounts. In this case, it would be 14,000 rupees. This example demonstrates how the city of residence can significantly impact the HRA calculation. In metro cities, the percentage of salary considered for HRA calculation is higher, leading to potentially higher HRA claims. To recap, the computation of HRA holds significant value as it determines a noteworthy portion of an employee's remuneration. The HRA calculation takes into account factors such as the city of residence, the total rent paid out, and the salary. The HRA amount is the lowest of three factors. Grasping the intricacies of HRA calculation could lead to substantial tax advantages. Thus, when you scrutinize the HRA part of salary the next time, you will precisely understand the derivation of that figure.